Southeast Radio's Business Matters with Karl Fitzpatrick.
Southeast Radio.
Welcome back to Southeast Radio's Business Matters with me, Karl Fitzpatrick. Well, people often wonder how decisions are made and how policies are formulated across government departments. Well, my final guest this morning holds all the answers. John Moran is a former Secretary-General for the Department of Finance, and he's now the chairman of a steering group for developing a national recovery plan for the SME sector. John, you're best remembered as the former Sec-Gen with Department of Finance. However, prior to assuming that role, you hadn't followed the traditional civil servant path.
Good morning, pleasure to be here. I guess you could say that, right? So I think on my website I've described myself as a multi-potentialite, which is a kid who hates being asked, what are you going to be when you grow up? Because I kind of kept changing my mind, and I had been a lawyer, and then I was working in New York, and then I was working and running a bank in Dublin. And then I went off to France and actually ran one of these small businesses, ran a restaurant while I was renovating an old house down there.
Today you were lauded for your progressive approach to bringing new ideas to the Department of Finance. Did your private sector background play a big part in being able to bring new ideas to the table?
Well, I guess in some respects it does. But it's not so much the fact that it's private sector as I think when you come in from any other environment, I think you tend to notice things that maybe some people take for granted, and you kind of wonder why you don't have something or why you do have something else there. And I think it was more that it's a diversity of ideas by bringing together people that have worked in different backgrounds. So as soon as we kind of arrived in, some of us had worked in banks, some of us had worked in other types of companies. We're like, well, we should have, a better risk policy, we should have a risk function. Why aren't we using laptops? And lots of things that you would take for granted in other environments, sometimes private sector, sometimes public sector. And I think that was really it more than anything else. So you can kind of hit the ground running a little bit faster, perhaps, in terms of what you think might need to change than if you've gone up through a career progression in the same organisation, because it's harder to see what something else looks like.
And when you look back at that particular part of your career in the Department of Finance, what are you most proud of achieving?
It's kind of going to sound strange to be saying that at the moment, but I think the one thing that really worried me more than anything else back when we were in the middle of the last sort of financial difficulty in the bailout was the fact that our employment numbers continued to rise. The unemployment numbers continued to rise during 2011, 2012, and I had seen that a sort of similar thing happen down in France when I was down there, and a sense of despair almost coming in, an intergenerational despair. And so the whole idea of, fighting the unemployment numbers that we had, and in fact, I suppose, putting the country on a path that before we got hit with COVID had pretty much us all back into full-term employment. And it seems to me that's the most important thing that I would say. Yeah, if you had one thing that I set out to say at the beginning that we really wanted to drive on with, it was really getting people back into work, because that's the best way out of poverty. It's the best way to deal with inequalities across society.
Now, back in March, the country was thrown into chaos as a result of the COVID-19 pandemic, with the economy closing down at record speed and hundreds of thousands of people being instantly out of work. But from your perspective and experience, what process would the Department of Finance have followed at that particular time?
Well, I guess I remember doing a TV show talking about the formation of the government in mid-February. And at the time, very few people were talking about COVID and what was happening, and having a sort of a debate. I think it was with Shane Ross about the fact that the formation of the government should happen quickly because there was a health scare around the corner, which would very quickly turn into an economic scare. I'm pretty confident that at the time, sort of in the bowels of the department, even though the government had been set up, that they would have still been trying to analyse that, looking at Italy, looking at other countries to see what was happening, and trying to get ready with policies like the one about, that we ended up having to bring in the country, which is to connect employees and employers so that they stayed connected, and with the so-called COVID payment. And, each of those new policies, they don't really get invented overnight. There's a couple of, people typically charged with looking up for ideas and trying to sort of, make sure that they would work in an Irish context.
And how much inspiration would have been taken from what was happening overseas?
I would say a lot. Now, we would also say, I suppose, as part of the SME recovery, work that we've done in the group that's pulled that together is I think we think that we should be doing a lot more. I mean, the European system is now helping a lot for us to become much more aware of what can work under, the European state aid rules, which try and restrict governments helping their own countries or their own companies and things like that. But as the situation develops, there are officials from the departments over and back to Brussels hearing what other colleagues are doing across the rest of Europe. And I mean, typically they should be learning from those. I think each country is different, but in the context of a European Union, I think it's really important that we quickly get to a point where Irish companies aren't at a disadvantage for being Irish compared to, say, a German SME or an Italian hotel or, an operator that's down in the south of France running a tourism product or whatever else it might be. So I think that's really one of the things they've got to do, we would say much better, is that there are schemes, like in Denmark, there's a very impressive compensation scheme for losses through COVID, which we've recommended. Ireland introduced something very similar to that. The French system has much more take-up of their loans, mainly because they're cheaper, they're easier to get access to, and that's really important for companies struggling with cash flow today, that they can get ready access to money at a very low rate so that they're not paying through the nose for it.
And when it comes to the Department of Finance's decision-making process, how much of an input would other stakeholders have, such as industry bodies and unions, in terms of influencing the decisions that are being made by the government?
Yeah, I think people are always intrigued to understand how government works, right? And so, I mean, Irish government works like any other government in some respects. I mean, it's a smaller country, so therefore, in some respects, it's easier for the decision makers to hear ideas, to be influenced by new thinking. But fundamentally, it's the government ministers that make decisions, so that the public kind of officials, the Secretary General of the Department of Finance or public expenditure or business, their job really is to analyse policy choices, make recommendations to the respective minister who may take them to government or to the Oireachtas. And so they need to be constantly kind of looking for and being fed with new ideas. And that's obviously particularly important when you're going through a crisis like this. But I guess there's many people who would say, and I would subscribe to that, never waste a good crisis, right? I mean, this is an opportunity for us to really take a look at some of the operations. We went into this with a housing crisis. We're still going to come out of it with a housing crisis. But I think a significant gearing up of the delivery of housing as was happening in the run into the crisis. We should continue with that because that will create employment. It will create jobs for architects, for builders, for construction workers. It'll also create the employment in the bars and the restaurants that actually these people will, buy a sandwich in or have a pint in at the weekend. So that's a very easy decision, I would say, for the government to make to, unlike 2010, 2011, when we had a surplus of houses, now we have a deficiency to do that. But there's also a moment now where we can really reimagine our towns and our cities. Learn from the experiences that people are going through in terms of COVID, in terms of what public space should be available, what we should do with it, et cetera, et cetera. And I think that's one of the important things we can do now here is to kind of have a win-win situation across a number of different fronts.
Now, Tom Parlin, the Director General of the Construction Industry Federation, joined us a short few weeks ago, and his take on it over the next couple of years within the construction sector was the opportunities lie in two areas. One, in social housing, and secondly, in relation to construction projects for multinational companies. Would you agree with that?
I think we certainly need to do something on the social housing, but I think we need to do it across all housing. I think the topography and the type of housing we use, where we do, I sort of remain hopeful that this has been a wake-up call to people who have, I mean, I've rallied long about this. I've given out about the concentration of too much of the state occurring in the capital to the detriment of areas in the southeast or indeed over here in the Midwest. And I think we've all woken up to a kind of a reality check that it is possible for people to not have to do these long commutes every day just to be at work. So that I think that gives a huge opportunity for, places like the South or East. I mean, because I'm talking to you guys today, to come together and reimagine their part of the country and say, well, what can it do best and how can it focus on this quality of life? And now I think it's a lot easier for people to convince their boss that they don't need to be commuting to arrive at 8 o'clock every morning, Monday to Friday, to an office block in Dublin. I think it should be open to have much more sharing of workspaces in places, whether it's Waterford or Kilkenny or Wexford or indeed over Limerick, but probably and most likely close to transport nodes, where we can use public transport to get around.
This week, the EU announced a €1.85 trillion recovery fund for the economies that were worst affected by the coronavirus pandemic. It has divided member states, as some stating that loans will only add to their debt and grants cited as the preferred option. What are your thoughts on this, John?
Yeah, this is probably the key question for us going forward, right, in the next couple of weeks. I mean, as the government is formed. At a sort of a national level, this is not like the last crisis, because the last time around we had become somebody to whom nobody wanted to lend money. They didn't trust the banks. They didn't trust whether the government was going to have to put even more money into them, and therefore the government wouldn't be able to pay back its debt. So it was very expensive for us to borrow money last time around. This time around, it is possible. I mean, it's not an infinite choice, but it is possible for our economy to be assisted in its recovery by not having to bear the brunt of too much austerity or too much pain straight away. And the government can borrow and spread the losses, which we are struggling with, but spread the pain of those over a couple of years. And that's essentially this borrowing capacity. And what's clear is that Europe is going to allow us to do that in a much less painful way than the last time. And in effect, allowing us to borrow at the kind of the European rate, which is still a lower rate than Ireland would be able to borrow at itself. Then the question becomes, what do we actually do with the money that we might borrow, and how do we put that into the economy in a way that makes the most sense and doesn't basically waste any of the money, because at the same time it's still borrowing and whatever. We might find that we get to a world where some of the larger European countries recognize that some of the hardest hit countries who can least afford it need to be basically helped along by the way of grants, so that grants coming from the European funds, a bit like everyone be familiar with the old times when European structural funds were used to help to build roads typically, but to do infrastructure across the country. So some of that might happen, but even without that, I think there's an opportunity and a capacity there in our own sort of way to take in some borrowings to allow those to be paid out. Now, if we're focusing on where we should be paying them, as I said earlier, doing stuff in construction industry is really important because we need to build up infrastructure and have some of that. But I think the most important message that I certainly from the SME recovery side we've been putting out is that if you take the bottom in terms of size, 100,000 small and medium businesses across the country, they employ only about 5 people on average, but that's still 500,000 people. And when you're looking at large numbers of people, particularly young people, particularly people outside of Dublin, losing their jobs in tourism, in retail, in the rest, we need to make sure that those industries can get back on their feet. And so we're recommending that we take some of that borrowed money and we, in a sense, create a compensation fund which will help to recapitalize those small businesses so that they can start growing again, readjust to the new environment that they're operating in, and actually deal with suppliers who can trust them to make payments in a couple of months' time for goods that they collect today, or even to go to the bank to draw down some real money. That's a way of loans, not to deal with the losses, but to actually maybe even expand, particularly for those companies that have moved into areas where in fact you might get a quicker recovery than others like tourism.
And John, how would you rate the Department of Finance's response to the crisis to date, and what would you have done differently?
Oh, that's a tough question, right? I mean, I think the most important thing, as I said earlier, is that the departments make recommendations to sort of, the government at the time as to how they actually should respond. And I think what we have seen is a correct response, which is in effect, an opening of the spending constraints to allow us to respond with the right necessary sort of power to the health problems that we have. The initial responses for business were, I think, well structured to keep employers together with their workers, and I think being a bit more generous on the payments was probably no harm because people were going through a lot of trauma at the time anyway. I think it's the next phase is going to be the really important one, right? So we've kind of dealt with a little bit the emergency. We are now going to be faced with some really hard choices because money's not infinite. We have to sort of decide who deserves the money most and where do you get the most impact. So I think we'd like to see the Department of Finance, the Department of Public Expenditure, the Department of Jobs and all of those, focusing now the available resources and maybe borrowing some more to do that on, measures that can really get back to the job creation point. I mean, I think that's the most important thing. I mean, I think we'll obviously hear claims by people looking for pay rises for public servants, and obviously the nurses and doctors have done a great job in the last while. But we all have to ask these hard questions as to whether they are currently the most deserving claims, that one and some of the others, compared to the plight of a business owner who's simply lost all their savings, trying to keep their business afloat, bills coming in and no revenues coming in. And so I think there is going to be a lot of the hard choices for the government. And unfortunately, I suspect we can't just hang out until next October in the normal budget for this. Businesses are dying every week, and we need to get and see sort of, action quickly for them so that they can believe that there's hope and there's a reason to keep going to struggle through this.
Well, if you've just tuned in, that was John Moran, the former Secretary General of the Department of Finance. And on next week's programme, John will join us to discuss his involvement in the SME Recovery Team and to detail the content of the National Recovery Plan for SMEs.
Southeast Radio's Business Matters with Karl Fitzpatrick.
South